Hey, what's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maskill, where we focus on helping guide you to have a prosperous blue collar business. Today, we have with us Andy Halliburton. Andy is the founder of Canlas Capital, where he helps business owners gain access to capital to grow and scale their business. Whether it's for a real estate transaction, working capital, or acquisition, Andy acts as your coach and advocate to get you where you need to go. He specializes in not only looking at traditional sources of funding, but also alternative lending. So that is Andy Halliburton. Welcome, Andy. Thank you so much for being here. What's going on today?
It's been a great week. Things are starting to roll along pretty well. Got several different new projects going on, and excited to be here with you today.
Awesome. Thank you so much for being here. So before we dive into your expertise, give our listeners just a little insight into how Canlas Capital came to be.
It's an interesting, quick story. After 2018, I had a business in Raleigh, North Carolina, and sold it. And I was trying to figure out what I wanted to do. It was going into my third or fourth career, and I'm thinking, I don't want to go back to work for anybody, for sure. And then I'm thinking about, okay, I've done consulting with big firms. I've run my own business, sold it, successful there. Where can I take those experiences and help people out? And one of the things that I always had problems with when I had my business was getting capital to grow. And so often I had to leverage seller financing, call a few friends. Hey, I need $50,000 for a year and a half. Can you lend it to me? Because even my bank, who knew I was profitable, said, no, we can't help you. So I started thinking about it, and I came across an opportunity to actually learn how to start your own capital company or lending organization. And I went through that training, and my wife thought it was a shiny object, but it's turned out to be a great experience because I've been able to help people with brand new startups, help people get out of bad situations and save their business. So we've been doing that for the last 4.5, 5 years now.
Awesome. Well, that is a great story. Great way to kind of segue into your expertise of, lending, capital, acquisitions, all the things that we can use your expertise to help our listeners out there. So you had mentioned getting out of bad situations. You've seen probably all of them. But what are some of the biggest mistakes from a financial standpoint that you see business owners making that maybe if they listen to you today, they can kind of avoid it before it becomes a bigger problem?
I think there's so many people that start businesses by themselves and never reach out for help. Specifically when it comes to trying to make themselves bankable and having a good set of books. I think when I speak with folks and I say, hey, can you send me this report? Can you send me this report? And right off the bat, I see everything come in on a spreadsheet. That means I know that, there's some challenges ahead. I think when we think about being bankable, it's not something you do overnight. It's a thought process, and it's something that you need to be thinking about day one before you even start your business.
So let's dive into that further. So what is, in your opinion, what does being bankable mean? What can those listeners out there today start doing to be bankable? Because, from my experience and your experience, usually when we need the funding, we don't have the ability to get it because we didn't do the things back when we didn't need it. So what are some of the things we can start doing today to become bankable? So when we do need access to capital for whatever reason, we can actually get it.
Okay, let's use a really easy example. We need to buy a new truck for the business, right? When I'm going to help somebody go get the financing for that truck, the first thing I'm going to look at, besides the application, I'm going to look at their bank statements. So many people don't carry a decent balance in their checking account, and whatever comes in goes right into their pocket. And I try to encourage people to have at least, 3 to 6 months worth of cash on hand all the time for basic expenses. And what that allows me to do is when I go to the bank, I can say, look at their average daily balance. There's going to be no problem for them to handle this $1,000 a month truck payment. So I think that's where, especially if a business is heavy in cash, it tends not to get to the bank sometimes, it seems like.
Yeah, I mean, I've seen it as well. Obviously, being their CFO, of not having the cash in hand, I like to see 6 months just so we can sleep better at night. And then, like you said at the beginning, don't run your business off a spreadsheet. Use QuickBooks. Have a bookkeeper that knows your industry, knows your trade, so you can be bankable when it is time to be bankable. So you said obviously the next step. So now we're going to assume we're just going to go down this journey. Now we are bankable. They reach out to you and you said you're going to go to different banks. What makes kind of your offerings a little bit different? Because I'm guessing everybody out there that's listening went to their local bank thinking, hey, I need a line of credit, or hey, we got to go to acquire this business, or hey, we want to buy some equipment. And the bank's like, no, not interested. What is your process when you're going to banks and, the other areas of actually accessing capital?
I think one of the first things I can do when I can help somebody is I take it off their plate, so they can focus on their company and their day job. Because I try to get to know whether it's a regional bank or national bank, I really try to understand their appetites. So rather than the owner of the business going to 6, 7 different banks and kind of getting deflated because these particular banks aren't interested in whatever the project is, I kind of have an idea of where I can place this before we even get started, but just based on my relationships there. The second piece of this is a bank's not always the right place to go to, a traditional brick and mortar bank. We may need to look at a non-traditional lender that focuses on helping small businesses, but they're not focused on always having fully collateralized loans. Because very often the local bank's going to want to make sure it's 100%, capitalized or underwritten that way to reduce their risk. So I've got other avenues, whether it's unsecured lending, non-bank lenders, things that most people aren't familiar with. And it's not the same things that you see online or where you get the phone call, hey, you've been pre-approved for, $100,000, call us. It's not those, because those tend to be bad scenarios.
Gotcha. That makes sense. And I know, a lot of people that listen to the show, especially in the last 3 to 4 years, growth through acquisition, I think, has really taken off. Private equities jumped into the blue collar space. They're buying up HVAC, plumbing, electrical, roofing, whatever they can get their hands on. And now a lot of business owners are thinking, man, I'd love to grow through acquisition, but I don't have, $1 million laying around. What are some of the avenues that we can use as business owners to start acquiring businesses?
Well, probably the one that sticks out easily is the SBA. There are programs within the SBA that will allow you to expand, and you may not even need to come out of pocket at all. Or I've done acquisitions leveraging that SBA, typically the 7A product. This is the most common, where we actually are getting money back at closing for working capital, just as this person's trying to expand. Typically, where you can do stuff like that is if you're staying within the same industry or a very similar industry. The other piece of this, especially when you're thinking about, trades organizations, if whoever they're buying out, maybe there's a key person in that organization that has the experience, has the license, that might make it easier, more attractive to the bank to bring that person as a minority owner. Not necessarily, 25 or 30%, it might be 10%. But open up the idea to think about, is it always just what I'm doing by myself, but think outside the box, understand what programs are out there, and then can I use other people to help me out to get there?
Love it. And I do see that a lot where the existing owner does stay on for a license, especially to have that license so you can keep operating, no matter what that percentage is, even if they don't have any kind of voting power in the new organization. So when it comes to, you mentioned working capital, a lot of times, as you said before, a lot of people don't have a lot of cash in the bank. What are some ways to access working capital? And what do the banks look for? Do they look for a plan to hey, what are you going to do with this $100,000 we're going to give you in working capital? Is it actually going to make your business healthier, or is it all going to go back to zero, just like you are right now? So what are the things that banks are looking for when, say someone's listening, man, I only got 10 grand in the bank, but Paul and Andy said I need 6 months worth. I could really use some working capital. What are the things banks are looking in order to even, kind of entertain that idea of giving out that working capital?
Well, it kind of reminds me when I asked my dad for money, he goes, what's it for? When you go to the bank or go to a lender, you need to have a well thought out plan. okay, hey, I need $100,000, and you need to be able to have the storyline of saying, what are we going to do with this $100,000, and how much is that $100,000 going to help me generate in the next 2 years? Because it's okay, it's one thing to say, hey, I need 100 grand just in working capital, but if you don't have a plan to leverage those dollars and actually make your business grow, the bank's not going to be interested in that. They want to understand there's going to be a return on the investment, not only for them, but for you, so you can make your payments back and secure the loan. Now, there's the idea of loan versus line of credit, which is two separate things. The lines of credit are a little bit more difficult to get these days compared to where they were 5 years ago.
Gotcha. So I think that's a good segue into current market conditions. So it's August 2024, we're recording this. What are you seeing in the markets as far as access to capital, interest rates? Obviously, when we're going, if we're going to acquire a business, it was a lot easier when the rates were a lot lower because of, the debt, how are we going to cover the debt, plus pay all the bills and all that kind of stuff. What are you seeing in the markets as far as, access to capital, interest rates, trending? Where is this thing going?
Well, that's $1 million question, right? Well, we've seen interest rates, I guess, over the last 2 or 3 years go up, about 11 times, I think, in the last couple of years. And I've watched people, get kind of set off on the sideline. And what I try to encourage people to do is we understand that wherever the rate is, the rate is. If this project, talk about an acquisition. If this acquisition makes sense at current interest rates, which are high today, you're going to make even better sense when the interest rates kind of trail back off. And I'm hoping that we'll see, like I think today they mentioned that mortgage rates have gone down a little bit. I think we're going to see that when we take a look at, say, like an SBA loan where they work off prime typically. I think we're going to start to see those things trickle down a little bit, but it's not going to be anywhere like it was 3 or 4 years ago. I think we're past the days of it being back in, the 4s and 5s. But in my mind, if the project makes sense, no matter what the interest rate is, then do the project. Because if it makes sense at a high interest rate, it's going to make more sense at a lower interest rate.
That makes sense. And you said something earlier that I want to kind of go back to. You said, the story that you're telling to the decision maker. Obviously, with a small business, there might, the banker might have a little bit more leverage than versus something like real estate. Real estate's a hard asset. Their underwriter looks at it. It's either yes or no, whether it fits in there. Whereas giving funding to a small business, there is some sort of story to that. What have you seen? Like, how much leverage does someone like you or the banker have in kind of swaying that underwriter into, hey, this is a good deal?
Well, that's actually one of the things I think I do very well, is when I talk with a prospective client, a small business guy. It could be, $500,000 business or $10 million business. Doesn't really make any difference. I try to truly understand their business, understand where their pain points are, where their plans are. And I build relationships with my banking contacts to where I can have very, very candid conversations with them. And then we are in lockstep working together to talk to underwriting. And what that allows us to do is support one another and work with underwriting to tell that story. And if he and I both are saying the same things, by the time we introduce the client for their client call, that guy already believes in the project. Now we're just checking boxes. So I think that's probably what I bring to the table, to be able to internalize whatever these guys are wanting to do. Because people get nervous when they go to the bank because it's like going to the principal's office. They're not used to talking about this stuff, where to me, I get excited about it. And I can say, hey, Jim is just hitting it out of the park. If we do this, if he does this, this, and this, he's going to skyrocket over the next 2 years.
Love it. So kind of bringing it back to action items for our listener as we start to wrap up this informative conversation. We talked about being bankable. We talked about, acquisition. We talked about working capital, and talked about all the issues you see that businesses have that they don't really know they have until they need that money. So what is one thing that they can do, I would say, we like to take immediate action. Want to give them something to take after this show and actually go do. What is one thing they can do within the next 24 hours to move their business forward? Because obviously we want more money in the bank, but that takes a little bit of time. If we want 3 to 6 months of money in the bank, we're going to get there, but it's not going to happen in 24 hours. What's one thing they can do tomorrow or today to start becoming more bankable?
It's a good question. I think probably if they take 24 hours and really write down their plan for the next 18 months, and then make sure that the books of the business get in good shape, QuickBooks or whatever, but make that commitment to where everything is very, very organized. It's not an overnight thing, but I think if they make that commitment to say, hey, I am going to move off my spreadsheet and I'm going to QuickBooks, or I'm going to contact Joe Blow bookkeeper, I'm going to take that step. That's going to be the first step to help them become bankable.
Love it. Yeah. And I totally agree. First, you got to have that vision. Where are we going in the next 6, 12, 18 months? What does success look like? I mean, even when I'm working with clients, that's the first thing we do. Where are we going? Because if we don't know where we're going, we don't know what we need to do tomorrow. So
right.
if y'all can get clear on where you want to go, then you can figure out what do we need to do in order to get there. Because I promise you, every single person listening at some point will need access to capital, whether it's a great opportunity to buy real estate, a great opportunity to buy a business, or a great opportunity to have an access to a line of credit because you need it to scale. Whatever it is, if you guys can start, building that vision now, you'll be glad you did. Andy Halliburton, thank you so much again for coming on the show, sharing your journey, and providing actionable advice for all the blue-collar business owners out there as we continue our journey to prosperity. But before we sign off, Andy, where can our listeners go to keep in touch with you and learn more about what you offer?
My website is www.canlas, capital.com. You can launch an email there or request a time to speak. My email address is, of course, andy@canlascapital.com. Feel free to drop me an email and I'll be sure to get back with you.
Awesome. And I can attest, Andy replies probably quicker than anybody. So canlascapital.com or andy@canlascapital.com. Andy, thanks again for coming on the show today. Really appreciate it.
Thanks. Have a great day.